Hi everybody. I wanted to quickly talk about cap rates. So if you are an investor or an agent, by now you have heard anyone talk about cap rates, whether it's another broker or an investor or a buyer or a seller. So cap rates are the capitalization rate. So basically a cap rate, whether you are in commercial, whether you're an investor, whether you're in residential, are a really good number to make sure that you look at whether you're buying, selling, or helping a client. So basically the cap rate is telling the buyer or even the seller what type of return on their capital they're going to be getting by purchasing a property. So cap rates are defined by the marketplace and by the asset itself. So right now you could be seeing markets that are a 3 or 4% cap rate. And when you get out into some less populated areas, they could be a 6 or a 7, or primary markets might have a cap rate of 7 or 8, and some smaller areas might have cap rates of 10 or 11. So basically the cap rate is telling you that if you are going to invest in a property, the percentage that you are going to get on your investment. So a 3 or 4% cap rate is really, really low return on your investment. There's lots of investors out there who like that because it still might be stronger than putting their money in a bank or putting their money in the stock market, or it's a stabilized asset that's highly appreciating. There's many reasons why someone would want something that low. So like in multifamily, I mean, just 2 years ago, cap rates were 10%, 8%, 6%. Now they're 4%, 5%, something like that. So it's a way that investors can look to see if their portfolio is going to be performing or returning their money that fits their portfolio. So a cap rate, how you figure out the cap rate, what the formula is, it is the NOI over the purchase price. And if it's a property that is not for sale, then you can just do the assessed value of that property. So NOI, just to let you know, is the net operating income. And so it is what the income that the property is producing after expenses. That's their NOI. So cap rates are super helpful with investors, buyers, sellers, anything of that rate, to let them know if it's a property that they want to invest in, because they know the return on their cash that they're going to be getting for that property. So if they have $1 million property and their NOI is $100,000, then that property has a cap rate of 10%. So that is a strong return. So a lot of people would really like that property. Still, there's some people who look for higher returns. So a 15% cap rate is usually on a property that is mismanaged. It's not in a strong market, and so it's a little bit riskier. And so investors and buyers will look for a higher cap rate. And then, like I said, you know, some investors and sellers and buyers will look at a lower cap rate, like a 3 or 4%, because it's a less risky purchase. Because of, you know, maybe operations are increasing 6% every year or more, or the property itself is appreciating just for the real estate alone. So they'll take a 3 or 4% because they know over time that it'll be worth it. And so as an investor, you want to look at what you're buying the property at, what the cap rate is today, and then potentially what the cap rate is going to be in the future when you go to sell. So cap rate, just to reiterate, is the capitalization rate. So it is the number on what you will get back from investing in that property. So it's basically looking at you buying a property for cash, and if you bought the property for cash and what the income that property is producing, how much interest, how much are you going to be making off of your money? So that's the cap rate. So sometimes people like to look at the cap rate a little bit more than other numbers, because the cap rate is strictly on looking at a property based off of if you bought it for cash. So it doesn't take into the debt service. It doesn't take in any mortgage or anything like that. So it's strictly your capital investment on a property and what type of returns are you going to get on that property by purchasing it at its current producing income. So hopefully that helped. Cap rates go around all the time. There's lots of different kind of variations of describing them, but it's a number to know. I mean, I'm looking at properties now that you buy them at a lower cap rate, but you are transitioning the NOI and increasing it, if not doubling it. And so you are jumping your cap rate up to a higher number. And so you are creating a higher opportunity for cash on cash return for your property, because you are better managing the property and increasing value in that property. So the money you put in and the money you get out changes after a year or two, and so that will affect your future cap rate. So you definitely want to look at what you're buying for it today and what it could be next year, what it could be the year after that, and then what the market potentially projects as well. So it's based on its current producing income, the NOI of a property, and the general market value of what the market will pay. So, I mean, the cap rate is based off of the market and what you can manage that property at. So it's a really important number to know and look at and be able to let your clients know or your investors know of what the number is on a property and what potential upside you're going to do to the property to make that number better or fix it. Or if it's a strong market, projections say that it's going down, which just increases your value. So if you bought it at an 8% cap and the market says that the cap rates are now 5%, your property is now worth more money. So that's another thing, that's why primary markets sometimes are a little bit stronger, because their cap rates will lower sooner and over time than some smaller markets. So again, it can get super complex, but basically the cap rate is the capitalization rate. That is your NOI over your purchase price, and that's how you figure out your cap rate. And that's basically telling someone, hey, if you bought your property for all cash and the amount of money that property is producing, that is your return on your investment. That's your cap rate. So hope you enjoyed. Please subscribe. Today was about cap rates, and I will definitely talk about other terms and things to look out at in the real estate market, whether you are residential or commercial. So subscribe and keep posted. Thanks.